All right. Ladies and gentlemen, today's webinar is about what's the investor landscape like in Africa, and is it open to all? And we are going to just listen in from a Tunisian case study. And our guest speaker tonight is Mr. Ashraf Karoli. And Mr. Ashraf Karori is an investment associate at Flat Six Labs, Tunisia, where he has been driving early stage venture investments for the past 5 years. He holds a BBA in finance with a minor in accounting from the American University in North Africa, and a Master of Research in econometrics and quantitative analysis from École Supérieure de Commerce de Tunis. Ashraf is also a Watson Institute scholar in Boulder, Colorado, USA. Previously, he founded iDuke, a now defunct startup. His expertise lies at the intersection of venture capital, startup ecosystem development, and data-driven investment strategies. Ladies, colleagues, allow me welcome Mr. Ashraf to take us through the webinar or the session this evening. Mr. Ashraf, you're welcome, and over to you.
Thank you so much for this nice introduction. So today I'm gonna go through Flat Six Labs' track record and activities in Tunisia, as well as delve deeper into the intricacies of the Tunisian ecosystem. Just along the lines of what the previous speaker was talking about, mainly like the African startup ecosystem and how each country is performing within. Uh, would like to start with the fact that Tunisia in 2024 was ranked the seventh ecosystem in Africa in terms of funds raised by startups. That would be around $400 million. $24 million of this amount went to the top 11 startups. Tunisia is a small country. It counts 12 million inhabitants. Its area is also small. It's around 160,000 kilometers. It's on it's in the upper side of the continent, the closest African country to Europe. Its coast is only 60 kilometers away from the Italian coast. That said, let's start by introducing what Flat Six Labs did in Tunisia, and then we'll go back to delve deeper into the Tunisian ecosystem.
Karoli, would you love to share your screen?
Yes, actually, I'm trying to, but for some reason I couldn't. Give me a few more seconds. Do you see my screen right now?
Yes, perfect, we do.
So what's Flat Six Labs? Flat Six Labs is the leading seed investor in MENA. We were launched in Egypt in 2011, just after the Arab revolutions, what we call the Arab Spring. and the goal was to leverage was to leverage on this new like initiative um, of supporting the Arab youth, helping them launch companies, launch startups, and help them scale and grow. Um, since then, we expanded to 7 countries. So right now we have offices in Egypt, Tunisia, Jordan, Lebanon, Bahrain, Saudi Arabia, and the UAE. Across these 7 countries, we have 8 investment vehicles. For each country, an investment vehicle, except for Egypt that had 2 investment vehicles. In terms of assets under management, around $100 million. In Tunisia, we had a first fund in 2017 with the size of $10 million, and there's an upcoming one with the same size. We have invested in more than 400 startups, and we have also managed more than 35 startup programs. Um, Platix Labs is actually an investor as well as a program manager. So we also raise money from donors, from GFIs to manage startup support programs. Some of these programs are related to investment funds, and some are not related. They operate independently. So these are the countries where we operate. Egypt 2011, that's the foundation year, and then as I said, since 2017 we've been operating in Tunisia. So here are a couple of important metrics. So we're mainly focused on Middle East and North Africa, where we see clear potential. In 2023 alone, 44 exits were recorded. More than $2.6 billion have been raised by MENA startups. Also, fintech is a thing. So fintech startups have been on the top of the trend. So this is what we offer. Our main activity is managing seed funds. So we raise money from institutional investors, manage that money, invest it into startups across different countries, as I said. Um, our our expertise lies mainly in the pre-seed and seed stages, and that's why our tickets range from 50K to $500K. We usually know how to prepare startups for later stages, for the Series A, pre-Series A, Series A, and beyond. We also have a network of institutional investors, mainly VCs, that can invest in our startups, and that even reach out to us to have a privileged access to our quality pipeline. So along managing seed funds, we also manage startup programs, as I said earlier, and we are also the go-to partner for corporates who want to integrate the startup ecosystem. So either invest in startups or collaborate with startups in an open innovation fashion. Here is an overview of our seed funds across the region. Um, so the Tunisia fund, the first Tunisia fund is called Anava Seed Fund. It operated, or it invested in 75 startups from 2017 to 2022. Its size is $29 million, which is around $10 million. And right now, we're working on two upcoming funds for Tunisia. The first is Tunisia Seed Fund 2, and I'm gonna expand on that in the next slides. It's also a $10 million fund that will invest in 30 companies across the upcoming 5 years. Um, but there is also, and it is the good news, I believe, for African startup. It's the fact that we're launching a Pan-African fund. This fund is called Africa Seed Fund. Its target size is $95 million, and it will be investing across Africa, except for South Africa. So if you're a startup operating in an African country, you'll be eligible. And if of course you're in the pre-seed or seed stage, you'll be eligible for the funding of Africa Seed Fund by Flat Six Labs. Um, this fund hasn't been launched yet, but we expect it to be operational by the end of the year. Here is an overview of our startup programs. So, as I said, some of our programs are linked to our investment funds, and these programs are called seed programs. So usually the startup comes, um, joins the program. Usually the program is from 4 to 6 months in length. And usually mid-program, it receives funding from a Flat Six Labs venture capital fund. So the point is not we not only train startups, mentor startups, but also invest in startups within the same program, which usually allows startups to spend the money um, in a more rewarding manner, I would say. Um, so some of the KPIs related to our startup programs. So we supported more than 3,000 founders across all types of programs, of course, more than 90,000 jobs created, more than 95 cohorts, more than 300 corporates and investors were part of our programs, more than 75 demo days, and you can find them online. I think it serves as a good as a good watch for upcoming entrepreneurs and founders who want to follow the best practices of pitching to investors. And also within our network, we have collaborated with more than 1,000 mentors. Now to Flat Six Labs Tunisia. So first things first, the Tunisian venture capital ecosystem is rapidly growing. A lot of VCs have been founded and launched in the past 2 years, and it's mainly thanks to Smart Capital, fund of funds, something that I'm gonna talk about later. Also, over $30 million invested in startups in Tunisia during 2023, driven by both local and international funds. As I said at the beginning of the presentation, the number for 2024 should be much higher. I found two estimates. The first one is estimating the total funding received by Tunisian startups in 2024 to be around 400 million. But this might be overrated, honestly, because probably some companies that are not considered startups were included in the population. And the second number is $24 million have been raised by the top 10 startups in the ecosystem. Of course, the top 10 startups with transactions in 2024, not the top in general. Here is an overview of the main VC investors operating in Tunisia. So first there is Medin VC. So this is a deep tech venture capital fund. They received money from Smart Capital. So Smart Capital is the national startup ecosystem operator in Tunisia. It's a company that's part of the state. So it's financed by the government. Um, and this company finances upcoming venture capital funds. In other words, if you're an aspiring VC, Tunisian VC, who wants to well, not necessarily Tunisian. If you're an aspiring VC and you want to launch a fund for Tunisian startups, you can reach out to Smart Capital and ask for them to contribute to your upcoming VC fund. That's what Median VC did. And in 2022, they raised a $10 million fund for deep tech Tunisian startups. Half of it comes from Smart Capital. So $5 million come from Smart Capital. Same goes for 216 Capital. So 216 is actually the phone code for Tunisia. Um, so these guys also raised a $10 million fund in 2021. Half of it also comes from Smart Capital. Um, these guys specialize in bringing African and European startups to host their back offices in Tunisia, and that's how they led the funding, the most recent funding round of Logido, which is a West African startup, mm, originally from Senegal, if I'm not mistaken. And that round was a $1.5 million round. There is also Go Big Partners. They focus on B2B startups. They have recently invested in a startup called Unfrauded. They operate a $7 million fund, and also a big portion of it comes from Smart Capital. There is also your GFS, United Gulf Financial Services, the North Africa office. They are the private equity pioneer in Tunisia, but since 2015, they've been managing VC funds. And most recently, they announced a VC fund, and also a big portion of it comes from Smart Capital. Same goes for Capsa Capital Partners, uh, which has historically been a private equity firm, but now they are also launching a VC fund with Smart Capital. Also, a couple of African and Middle Eastern VCs have been funded by Smart Capital to invest in Tunisian startups. Names include Django VC, one of the most active African VCs, with offices in Senegal, if I'm not mistaken. Silicon Bedia, a Jordanian VC with offices in Silicon Valley, and Lofting Capital, also an African VC with offices in Cairo. In terms of market opportunity, there is a significant one in Tunisia. So first of all, Tunisia has been recognized by a couple of institutions and innovation metrics, such as the Bloomberg Innovation Index in 2018. It's also a hub for notable development finance institutions, including USA, GIZ, IVOS, Innovi, Expertise France, BPI France, KfW. Um, so almost every major DFI has offices in Tunisia. Um, Tunisia has also pioneered a startup act in 2018 that was was the first of its own in Africa. And by May 2022, they have Smart Capital has already labeled more than 1,000 startups. The label allows startups to benefit from a couple of advantages, including holding a foreign currency account, not paying social security taxes, not paying income taxes, uh, also benefiting from major facilities when it comes to importing components for manufacturing purposes. Um, and as I said, so the Smart Capital, which is the company operating the national startup strategy, is also managing the startup label. And this company, as I said in the previous slide, has already invested in a couple of investment funds. Right now, the number is eight. So they've invested in eight investment funds. Um, and the target is 13 investment funds. So five funds yet to be funded. Startup wise, there are three main stars in the Tunisian ecosystem. There is Expensia, which is a Tunisian French SaaS platform for the tracking and accounting of minor expenses. This company raised a $20 million Series B round in April 2021, only to be acquired by Midrus in June 2023 in a nine-figure deal. So at least the acquisition price was around 100 million euros. An even more successful success story is InstaDeep. So InstaDeep is a Tunisian AI startup. They have built, they have actually attained major breakthroughs in AI, especially when it comes uh, to stock price prediction and biotech. They have sold to big tech American companies, including Google and Facebook. And in 2023, they were acquired by BioNTech, which is a biotech German giant, for nearly $700 million. And that was the largest acquisition ever for an African startup, and also the largest acquisition ever done by BioNTech. Go My Code is also a promising Tunisian startup. They raised the highest Series A round for an African edtech, a round of $8.2 million. That was in 2022. And hopefully the startup is gonna announce an upcoming round. So here is an overview of the Tunisian ecosystem. So first of all, there are ecosystem enablers, usually startup support organizations that don't manage investment funds, but offer significant mentorship and advice. Some of these are actually uh, subsidiaries of multinationals operating in startup support. Um, this applies for Impact Partner, um, which is part of the Yunus social business network, a global network launched by Muhammad Yunus, a Nobel Prize laureate and one of the main initiators of microfinance in the world. Um, OST, rebranded recently to Open Startup, is also a Pan-African startup support organization with programs across the continent. There is also Founder Institute, which is uh, a founder support program um, that was first started in Silicon Valley in the US. BetaCube is a venture builder. And then there are a couple of national operators, such as Afkar, Promise, Lebes, and TCSE. Investment wise, so we have Flat Six Labs that spans the pre-seed and seed as well as pre-series A stages in Tunisia. And there are Bridging Angels, a collective of diaspora Tunisian and Algerian business angels that have been active in the Tunisian ecosystem. We also have UGFS, Go Big Partners, 216 Capital, and Median VC, investors that we talked about in the previous slides. At the growth stage, we have a couple of private equity turned VCs, such as Capsa Capital Partners, African Invest. We have global and regional investors, such as Silicon Bay and Django. And we also have DFIs with VC arms, such as Proparco, which has Digital Africa. Digital Africa has been investing in startups. Proparco also invests in African startups at the growth stage. Same goes for IFC. IFC have been investing in African startups that are Series A and beyond. Terms of programs, we've launched and operated a couple of programs. IBDAI for female entrepreneurs in Tunisia, Elevator for females as well, Scale Up for advanced startups that are looking to raise their Series A, Ignite Tunisia for other startup support structures that need to level up or create new entrepreneurship programs. Build Up Tunisia has also supported startup support structures, but also has co-designed and co-implemented programs with these structures. These are our ongoing programs in Tunisia. So there's the Green for Youth Acceleration Program, which aims to accompany 32 green tech startups. And then there is the Green Growth and Jobs Accelerator Project in partnership with the UNDP program, as well as the support of the Danish Arab Partnership Program and the Ministry of Foreign Affairs of Denmark. Here's an overview of our first fund, Anavasit Fund. So it's a $10 million fund that invested in 75 startups. Some of these startups went on to become quite successful, so raise significant funding, generate considerable traction. Examples include Dapshi, which is a platform for pre-loved clothes. They have recently announced a $1.5 million raise with a couple of notable VCs. Um, Same goes for What Now, an energy monitoring solution. that has recently raised a $3 million round. Go My Code is the company, the edtech company that raised $8.2 million Series A round. There is also Commune, a company that raised significant rounds from notable African investors. Connect as well, they have recently announced a more than $1 million round with notable investors, including Visa. So some of these companies went on to really succeed. Uh, in these companies, we were the first institutional investor, and after investing in them, we helped them secure follow-on funding deals. So 33 deals were secured. So that's almost 44% of the startup portfolio, and these startups raised around 100 million Tunisian dinars from other investors. So that would be around $33 million US dollars. So this is a quick overview of our programs as well as our startups. These are the lessons learned when it comes to investing in Tunisia. So we were operating a fund accelerator model. So we fund startups. We don't only fund startups, but we also accelerate them. And that model needed time to establish trust with startups and donors. But it helped us a lot when it comes to brand equity. So usually startups that go through our acceleration program disseminate a good word about us, which helps us secure even better startups in the cohorts that come afterwards. Um, Also, that fund, also COVID happened in the mid of the investment period of that fund. So we had to navigate a lot of complexity, but thankfully we found ways to navigate these circumstances and ended up supporting our startups in the best possible way, I believe. Also, some entrepreneurs really proved to be resilient. They knew how to overcome challenges and how to adapt their offering during and after the pandemic. Um, Founders always come first. Usually, the track record of a founder is the strongest indicator of his future performance. And also team harmony is very important. So we'd love to see a founding team that has complementary skills, and where co-founders can work together peacefully for the best of the startup. Since Anava Seed Fund reached the end of its investment period, it's time to announce a new fund, which is Tunisia Seed Fund 2. And this fund will carry on the investment activities of Flat Six Labs in Tunisia. It's also a $10 million fund. It's been announced already in Q1 2025. And it will be operational very soon, probably by the end of next month. Its focus is pre-seed and seed technology startups. It will be funding up to 30 startup companies in Tunisia over the next 5 years. It will be investing directly into startups, and the seed tickets will range from 100K to $400K, and follow-on funding tickets may go up to $500K. So that being said, a big part of Flat Six Labs investment thesis is that reinvesting in companies, in our companies, is important. And it helps them secure even more funding. Um, because the observation made previously is that when you first invest in a company, even if that company has potential, it would be a bit difficult for it to secure new investors unless you, as Flat Six Labs, I mean, as the historical investor, is willing to put more money into that startup. In other words, it sends a positive or a reassuring signal to the potential co-investor. It's like you're telling him, I'm still here as the historical investor. I trust this founder. I believe in this company, and I'm reinvesting again. And that proved to be a significant booster to our startups' fundraising potential. Um, so that's mainly it. Happy to hear your questions, and the floor is yours.
Thank you very much, Mr. Ashraf. That was an interesting, serious conversation. In Uganda, you would hear such conversations. They used to say that such conversations would happen around the fire with our great grandfathers, and I believe that the session has been such very um, uh, serious but necessary, especially at this point in time in Uganda, where we need to find local investors supporting local businesses. Yeah, at this particular point in time, I think we shall be able to take on questions. So if you have any question, feel free to raise up your hand, and then I will be able to call you to ask your question. But as well, I am seeing already one in the chat from Roy, and it says, "Good evening, everyone. Hope all is going, enjoying the session. So, Mr. Ashraf, you talked about 300 plus VCs, including corporates. Are you saying that you also manage corporate venture capital funds on behalf of corporate companies?" That is the first question. And maybe as we wait for a few more others, and maybe someone to be confident enough to raise up their hand and speak by their own, maybe you may want to take up that question. And maybe later on, I think you talked about some interesting aspects in your startup act. If you don't mind, I think it will be nice to share a few details about. Um, oh, I see even a question actually relating to that. Ashraf, are you able to take more questions at a time, or we take one
Of
at a
course,
time?
of course,
Okay,
of course.
perfect.
Let me first answer the first question.
Perfect.
So we have corporate innovation programs. So usually corporates come to us and say um, that they either want to invest in startups themselves directly, or run some open innovation programs where startups help them build something, improve something within their companies. And that's what we do. And when it comes to such partnerships with corporates, as well as investors, because other types of investors do come to us for the same purpose. So sometimes a private equity firm, uh, or an investment bank, a startup support structure may come to Flat Six Labs to ask for support when it comes to investing in startups or building open innovation programs. Um, So within these partnerships, we count more than 100 corporates and investors that have been supported by Flat Six Labs.
Oh, great. That is really exciting. And I hope that answers you, Roy. The next question is, which funds are available for Ugandan startups? Alongside another question here, which says, thank you for the presentation, Mr. Ashraf. Did you say that Startup Act provides startups an opportunity to be waived off of income tax, national securities, and others? I think it is an interesting one, actually. Doesn't that affect the startup's employees from being considered in the national savings system, for example?
For the question about Ugandan startups, um, so that would be Africa Seed Fund. As I said, Africa Seed Fund is an upcoming fund managed by Flat Six Labs that aims to invest in pre-seed and seed African startups. So Ugandan startups are eligible, and actually our partner covering sub-Saharan Africa is from Uganda. Her name is Christine Namara. You can Google her. Uh, so she's covering the whole sub-Saharan region. For the question regarding the Startup Act, so that's correct. Um, if the startup gets the label and satisfies the annual requirement of the Startup Act, it will get exempted from the income tax for a maximum of 8 years. Same goes for Social Security taxes. Uh, and of course, they would be part of the national social security saving program because it's the government that will be paying their social security contributions instead of the startup paying it for them.
Oh, interesting, interesting. I hope that answers you, Othieno. The next question is, my question is on transition. How do you support startups transit from the initial phases to product improvement and scaling in the market? Do you have sessions, programs to improve the capacity of the innovators like Y Combination? Or I think maybe Y Combinator is what he meant. Yes.
So how do we do it? Um, so within the acceleration program that usually lasts from 4 to 6 months, we start by auditing all the business areas of the startup. And after that audit, we identify a couple of pain points. And to solve these pain points, we resort to our network of mentors and experts. We have a huge network, and usually, because we invested in hundreds of startups, the pain points become recurring. So usually we've seen that before. We know who's the best mentor, who's the best expert, who's the best team member who can be onboarded on that. And then we develop a tailored action plan to work on that pain point, and we end up taking the startup to the next stage. Um, that being said, every work that's being done is really tailored to what the startup needs. So I cannot really give a generic answer that works for everyone. Some startups come with a fully fledged product, but with no sales or marketing function. So you'd be helping them build that. But other startups are already struggling with the product. So you need to help them with the best resources when it comes to product management, technology, and so on.
Great, great.
Is that um,
Is that the way Y Combinator does? I would say it's quite comparable. Some people call flat six labs the Y Combinator of the MENA region. So we operate at the same investment stage. It's pre-seed and seed. Um, and we both follow a tailored approach to startups' pain points.
Oh, great. Thank you very much. Thank you very much, Ashraf. I know so many questions have been coming over the other. I see another question, but maybe we can give you 1 minute to first breathe and take some water. And during that time, I want to notify our participants this evening that we are glad and happy to be joined by the champions of SFV, of startup funding vehicles. And I believe that Ashraf has some of his colleagues, 1 or 2 that joined in. Maybe he will be able to introduce them later on. But I take the chance and opportunity to acknowledge our partners, Uganda Management Institute, Startup Uganda, of course, TechBuzz Hub, and to be specific, our guest speaker today is from Flat Six Labs. We have our champion members of SFV. I have seen Dr. Maina on the call, Maina Charles. I've seen Miss Jennifer Nakaiza. I have seen Roy Ndagile. I've seen Epath Roditas. I have seen Dorcas Aine Biona. And of course, Eric Jaguara. I want to again thank you very, very much. There should be also our colleagues from Makerere University who should be on the call as well. And those that I might, of course, our partner Dora Akelo, who is also a partner of TechBuzz Hub from the aspect of intellectual property. So should you have any challenges around intellectual property, then you're sure that solution is within the community. Yeah, I want to again invite our guest speaker to address 1 or 2 questions that I have seen in the chat. The first one being um, I am Mantul Manyok from Bidibidi, manager of UNHCR Bidi Soap Factory. The question is, I think, is there a different or are there different is there a different program for refugee startup, or does your program integrated them to national investment platforms? I don't know whether that is clear, but I think the gentleman is asking, are there programs that are specifically for the refugee communities, or all refugee programs are integrated into national programs? Then the next question is, would you would love to know if Africa Fund launches, maybe I know, maybe you wanted to say when Africa Fund launches and Flat Six Labs starts running acceleration programs in other countries, other regions in Africa. Will it require founders to move to only Tunisia for mentoring and product development? Um, yeah, I think those are 2 questions, but there is another third one here. What role does smart capital play in supporting venture capital investments and startup ecosystems in emerging markets like Tunisia?
Thank you for the questions. For the first one, as of today, we have no programs that are specific to refugees, but we are an ESG investor, and we pay attention to every founder's specific situation, and thus we would take the refugee status into consideration. So that's definitely a plus um, in our investment potential assessment. Um, then there is a question regarding Africa Seed Fund. So we expect the fund to be operational by the end of the year. So that would be during the second semester of 2025. And no, we don't require founders to move to a certain location. Um, the acceleration program will be online with some physical programming. Um, so you would be meeting other founders a few times during the program, and locations will be determined during the program. And then the third question is regarding smart capital, but it's not obvious which smart capital the participant is asking about. Is it smart capital in general? So capital that's smart, or is it the Tunisian entity called Smart Capital? So if it's the Tunisian entity called Smart Capital, as I said, they run a fund of funds, and that fund invests in upcoming VC funds. So if you're an aspiring VC who wants to launch a VC fund, and that fund will be investing in part in Tunisian startups or Tunisian founders, you would be eligible um, for for funding from their fund of funds. They also help startups and technology companies in general by investing directly in them. They have a fund called Innovatech, and that fund has been writing checks to technology companies. They also manage the Startup Act, including the startup label. So they have a committee that decides which startup receives the label and which startup doesn't. And as I said, the label offers many advantages and benefits to startups. And these advantages are also administered by Smart Capital. Moreover, they have an ecosystem support role. So sometimes they intervene with specific financial instruments to help startups, to help startup support structures. In the past, they've helped startups close their ongoing investment rounds. So sometimes you have a startup willing to raise a $2 million round, for example, but it still lacks $300K. Smart Capital would intervene and probably offer some funding um, to close the round and to assure the investors leading and taking part in the round uh, that Smart Capital believes in the potential of the company. With startup support structures, they've provided funds that were used to implement new startup programs. So that's mainly it. I would say Smart Capital intervenes in one, funding VCs, two, managing the Startup Act, and three, supporting startup support structures.
All right, all right. Thank you very much, Mr. Ashraf. I know Justus had raised up his hand, and I see he has quite a number of questions, two of them. Justus, if you don't mind speaking, unmuting, and you speak or you ask the questions yourself.
Thank you very much, Mr. Moderator, and thank you, Ashraf, for the insights you have shared. It's very rich, the knowledge you have given to us. My questions were two. One, I've heard the fund for Tunisia 2.0 is specific to technology startups in particular. What is the criteria you use to specify the sector you're going to invest in? For example, if I'm in agriculture, I would be kicked out. I would have to wait for maybe another round. So what's the criteria you choose to 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 decide? Is it the boom? Is it the economy and something like this? Yeah. Then yeah, something like that. That's my question. Then my other one was on investment potential. You have mentioned that you assess the investment potential or viability of a specific startup to see how you invest in it or support it in one way or another. So what do you consider to be your threshold or your minimum, maybe the capitals in the startup or the sales, or what is your minimum standard to consider a startup viable for investment according to Flat Six Labs? Thank you. Thank you very much. Those are my small questions. Thank you.
Thank you very much. And maybe if we could add this one for you, Mr. Ashraf, I would like to know the difference between pre-seed and seed and then series A, B. What is the difference? Thank you.
Sure, sure. Thank you guys for the questions. So for the first question, we're actually a sector agnostic investor. So we don't have sectoral preferences. Our only requirement is that the startup has a strong technological component. So technology is at the core of the startup. What the startup does it with technology, and preferably defensible technology. Why not even breakthrough technology? And the second one is the business model should be scalable. In other words, I should see that you can double, triple, increase exponentially your traction, mainly your revenue, but without incurring additional expenses each time, expenses that are not related to that revenue generation. So in this way, a factory, for example, that uses technology is not eligible for Flat Six Labs funding because a factory's business model is not scalable. So these are the two main things to keep in mind. The strong technological component and the scalability. You also asked about which metrics, which indicators do we use to end up to assess the startup's investment potential. And honestly, these like depend on which sectors you're operating in. If you're an e-commerce startup, for example, I would be looking at GMV, at the revenue, the take rate, the average basket size, the items, the catalog, the supply and the demand, and how do they match. But if you're a biotech startup, for example, I would be more interested in your patents, in your R&D efforts, in how your technology is breakthrough. So the indicators differ sometimes in a diametrical way from one sector to another. I hope this answers your question. Also, the latest question was regarding pre-seed, seed, and pre-series A. So at pre-seed, you're usually starting off. Probably you have a prototype, an MVP. You have little to no traction. You still haven't raised funds, or even if you did, it's love money. It's money raised from friends and family. Uh, so that can be considered like the earliest stage of a startup's life cycle. At seed, you're usually more advanced. Most startups in the seed stage have a working product, sometimes a fully fledged product. Um, some also raised a small pre-seed money. Uh, uh, Usually, startups have gone through one or a couple of startup support programs at this stage. In pre-series A, usually the startup is even more advanced. The product is fully fledged at this stage, and the startup has raised money from institutional investors, usually at the seed stage. And now the startup is looking to either bridge that gap between the seed and the Series A stage, or just like expand to new verticals, to new segments, or even like leverage on the existing segment. Um, Also, usually pre-series A is called this way because it's the last round before a series A. Series A is called this way because it's historically it was the time when startups would issue their first A shares. An A share is a preferred share. It's a share that has or that offers preferential rights to its holders. So the new investors that would put money in Series A rounds usually have better rights or more rights compared to the earlier investors, such as pre-seed, seed, and pre-Series A investors. Um, so that's the etymology behind the word. Um, but in the past decades, the word took another sense. A Series A is usually the first major round that's gonna allow the startup to scale regionally, scale globally, integrate new markets. Uh, and that's what happened even with the examples I mentioned. So InstaDeep, Expense, and GoMyCode all used their Series A money to expand to new countries, new markets. Um, After you raise a Series A, every major round you'll be raising. And when I say major, that would mean the round is of a comparable size to the Series A round. So every major round you'll be raising will take an additional letter. And that's how you get to Series B, Series C, Series D, Series E, and so on. That letter count would end once you decide to go outside the private spectrum. Uh, because all of these rounds are private rounds. Private rounds means that the startup is not listed in a stock exchange, is not public. It's still raising money from private investors. But once the company goes public and gets listed on a stock exchange, Now it's raising public money, it's raising public equity from public investors, and thus we don't use the letters anymore. Usually the first round that the startup raises publicly is called an initial public offering. The name comes from the fact that the startup is offering its equity for the first time to everyone, to public investors, which is basically everyone with money who wants to invest in equities. Uh, Of course, after being listed on a stock exchange, a company can raise more rounds, and these would be secondary public offerings. I hope this answers your question about investment stages. I know it's a bit tricky, and there is a lot of jargon being used. So I hope this adds a layer of clarity
I
when
I
dealing with such concepts.
I believe so. I believe so. And one last question we have, and maybe I just want to make a little bit of maybe case study. In Uganda, we have a telecom company, actually telecom companies, two of them that are that once or many times have made their initial public offering. And what is surprising is as soon as they make their public offering, the shares are bought off completely, and um, other people who are looking to buy can no longer get shares. So that literally talks about the appetite that Ugandans have when it comes to the interest or their interest in investment. However, we have challenges in having active investor networks in Uganda. And maybe as you wrap the last question, if you may want to, if you have some experience in setting up investor networks that are local, in-country investor networks. I know Tunisia has quite a number of the investor networks. That would be interesting also to share. But the last question we have in the chat is, would you like maybe would you like to define would you like a definition of investment vehicles and which ones Flat Six Labs favors? Also clarity on little about follow-on investing, no, follow-on funding in light of the existing series, the traditional investors work through. I think maybe you can answer the question, the first part of the question that seems slightly clearer. Maybe is asking what investment vehicles. Nicholas, are you part of the call if you want to ask the question yourself? I think I have failed to get the exact question. Nicholas, are you still on the call?
Yes, I am. Can you hear me?
Yes, we can hear you, but you're low. You may need to increase your volume.
Let me increase. How about that?
Fair.
Yes, I just thank you, Ashraf, for the talk, and thank you, Sheikh Ashab and Ken, for making this happen. I'd like a bit better definition of investment vehicles and which ones Flat Six Lab favors. And then the second question is on what you mentioned about follow-on funding. I wanted to understand how the question of follow-on funding relates to existing series of the traditional investors in Series A, B, C, and whatever. So, what role follow-on funding plays in Flat Lab's strategy.
Okay, thank you very much for that question. I hope Ashraf has gotten it. And I think, Ashraf, after that question, you may want to make your closing remark, after which we can, for those who do not know what startup funding vehicles is, the initiative that is bringing to you such sessions every 2 weeks. And by the way, for your information, in the coming next 4 weeks, we are going to be having these sessions weekly ahead of our soft launch, which shall be happening in the National Science Week in June, mid-June. So I want to invite you all to keep your eyes open on the next sessions that shall be happening weekly. After the end of these sessions, we shall be issuing a certificate of investment fundamentals completion. So if you want to have that certificate, you better follow through the sessions, and then you can also have that certificate during our launch day mid-June. Yeah, so Ashraf, you may respond to those questions, and then you make your closing remark, and then we can call it an evening.
Sure.
Thank you.
Thank you for the question. So first, an investment vehicle is a structure, a legal structure that allows an investor, one or many investors, to invest their money in a company. Now, depending on the jurisdiction, there are different investment vehicles. But usually, there are three main types. One, you would be selling a regular company and then put in money in the capital of that company, and then that company will be investing that money in other companies, which is what we call a holding company. So you'd be creating or incorporating a company that would play the role of a holding company. But this is not optimal. And Flat Six Labs does not prefer that because this structure is not specific for investment purposes. It's a regular company. So usually you would be paying the same tax, and usually that capital put in the company by investors does not offer them any tax advantages. And that's why almost every investor avoids that, except for very large groups that really need a holding structure to hold all of their assets. The second type is opting for an investment fund. There are many types of investment funds, but the most important thing to keep in mind is that in most jurisdictions, these funds are not considered a moral person. So it's basically a pool of money. The fund is a pool of money. And since it's not a moral person, it needs another moral person, another company or structure to manage it. And that's where the asset manager intervenes. So you have the fund, that's a pool of money. This money comes from a couple of investors, and that pool needs a manager. That manager is the asset manager, is the company that will manage these assets, that will manage this money. And this is what Flat Six Labs does. So Flat Six Labs is an asset manager specific to venture capital, of course. So you can call Flat Six Labs a fund manager. So it does manage funds, and these funds invest in startups. The third option is to opt for an investment company. The only difference between an investment company and a fund is that an investment company is considered always a moral person, and thus it does not need a manager.
It does not need another company or another structure to manage it. It can manage its own funds. Um, of course, depending on the jurisdiction, there are differences when it comes to taxation. And I would say taxation is the most important factor when choosing a type of vehicle to invest in. In most jurisdictions, funds have the best taxation because it's tailored for investment purposes. So usually, the investor putting money in a fund dedicated to startups, for example, is expecting a certain tax advantage since investing in startups is super risky and from 70 to 90% of startups fail. So if the government does not encourage investors to put money in such funds investing in startups, investors would be reluctant to do that on their own. They would be turned off. Um, and that's why taxation and that's why tax advantages are important because they encourage investors to go for such asset class.
All right, all right. Thank you very much, Mr. Ashraf. If you don't mind making your closing remarks, I think this is the opportune time. And um, to our attendees tonight, we thank you very, very much for making the time to listen in from the rich knowledge. I was corrected that the right word should be rich, the rich knowledge that Mr. Ashraf was able to share from his rich experience indeed, and you could really listen in into the responses to the questions. I believe everyone who asked the question was very satisfied by the response that Ashraf provided. Yeah, so Mr. Ashraf, we want to thank you. Thank you very much for taking the time to engage with us, to tell us what what Flat Six Labs has for Africa, not just Tunisia, and specifically for Ugandans, how we will be able to leverage the Africa Fund. And I think it is an opportune time for us to get this information earlier so that we can start looking out for those opportunities when the fund is fully launched. I want to request you to make a closing remark, and then we can, for like other 5 minutes, discuss, ask Eric to tell us a little more about startup funding vehicles and who can join this drive to empower the local Ugandan ecosystem to develop its local investors. Over to you, Ashraf.
It's my pleasure, Ken. I really hope this session has been informative.
Very.
Um, I believe there is a lot of comparable intelligence about the Tunisian ecosystem that can be leveraged by our Ugandan brothers, especially when it comes to smart capital, its role in the ecosystem, the Startup Act, the Fund of Funds. Also, when it comes to building a network of investors. Uh, so these can be replicated, I believe, in other African ecosystems, bearing in mind, of course, the intricacies and the idiosyncrasies of each ecosystem. Um, That's mainly it from my side. You have my contact information. Feel free to reach out. You can text me on LinkedIn. I'm quite responsive there. Wishing the best for all of you and have a great weekend ahead.
Thank you, thank you, thank you very much, Ashraf. Indeed, as you said, I don't know where Africa would be if you did not take the leap to have the very first Startup Act on this continent. Just a few months ago, actually, it's last July, I was in Tunisia just to understand how your Startup Act operates, and I had the opportunity to also visit Flat 6 Labs. And I think that is how we came to build a close relationship with our Tunisian brothers and sisters. And right about now, we are enjoying the benefits. And with that said, thank you, and we hope we can host you again when we have even made much bigger developments around our investment ecosystem here in Uganda. At this particular point in time, colleagues, ladies and gentlemen, you will allow me to let our guest speaker to take his leave. And for those who do not know what startup funding vehicles is, I will invite Eric to introduce you what startup funding vehicles. Just like I mentioned, we shall be launching startup funding vehicles next month at the National Science Week. And we hope that a few or many other local investors are going to join this movement. And then we can start seeing local capital start flowing into this country. As Eric presents, please be keen on understanding the genesis of this project and how you can be part of it, be part of the conversation, and also what you can support where necessary. Eric, are you there? Eric, are you there? Okay, maybe Eric is not there. I will quickly take you through. So Startup Funding Vehicles is an initiative spearheaded by TechBuzz Hub, but it is open to the entire ecosystem and focuses on strengthening the local investor networks. The goal is to develop as many investor networks as possible, just like you've had a number of those that are existing in Tunisia. We would want to have much more of all like investment platforms or investor platforms in this country. They could be angel investor networks, venture capital investor networks, corporate venture capital networks, and so on and so forth. So just like I said, it is open to the ecosystem and focuses on empowering local investors so that they can support the homegrown startups. There is a big challenge, and all of us know that funding or accessing funding in this country is one of the biggest challenge. If you have tried starting up a business or a startup in Uganda, the biggest eyes or the biggest focus actually would be on how to raise external investment, because we have no one we know who has raised as much investment, or if they're there, they're just quite silent somewhere. And this affects growth and your ability to actually attract external investment. Because you don't have local people who have believed in your solution, it becomes twice, if not 10 times harder to convince a UK-based investor, United States, maybe China, maybe Indian investor to invest in you, because they don't have someone they can it becomes harder for them to believe you. And at the end of the day, when startup funding vehicles become strong, it means that our local investor networks will strengthen. That's helping startups to even raise much more capital. Learning lessons from the big four countries. When we say big four, we are meaning big in terms of startups. Nigeria was able to raise 1.2 billion US dollars in 2022 as local funding from local people. Kenya's Silicon Savannah contributed 8% of their GDP in 2022 still. South Africa was able to grow its financial inclusion by 23%. That was from 32%, no, 34% to 57% in a period of 8 years as a result of startups. That is literally talking about the potential startups have. And Egypt raised 400 million in 2020 as internal capital or internal funding. We've just had Mr. Karori also saying that in 2024, Tunisia is estimated to have raised 400 million. I'm not sure whether all that is internal or local capital, but it tells you how far we are on a weighing scale against these other countries. And this is a little visual, a little visual map to look at. Did you know that actually Africa as a whole has the potential to unlock 40 billion US dollars every year in funding? However, in a period of 5 years, we were able to raise only up to 12 billion US dollars. In 5 years, this is not 1 year, 5 years. So that tells you how we are doing, how much we are doing badly. We have a lot and enough of money internally, but it's the money, it's actually money that's certainly sitting in the banks. And when you look at the 12 billion we are talking about raised, it is only taken by the big four that I just talked about previously: Nigeria, Kenya, South Africa, and Egypt. And again, when you look at, just look at the size of Uganda, it is demonstrating how much we were able to raise or how much we contributed. That is like, I think, a 10th of Kenya, a 20th or a 15th of Nigeria, and so on and so forth. But what is very, what we observe is that countries that are doing very well also have very active angel and venture capital networks. The likes of Nigeria, you see they have 6 of them. We see Egypt has 5 of them. We see South Africa has 5 of them. We see Kenya has actually 2 of them. It challenges the odds, but it also depends on the activity of the angel networks or the venture investor networks. Uganda has 3, is what we see that were reported, but I don't know how many of us know a lot of these networks, but I think we are also taking a right step in the right direction, a good step in the right direction. We see Renew Capital, Ajax Capital Group, Kampala Angel Investor Network, and we hope that maybe startup funding vehicles could raise even much more investor networks that could end up, investing in Uganda. Sorry, looks like my screen has gone off, but yes. Next is quickly is what is the vision board for startup funding vehicles? Is to create a robust investor culture in Uganda. Why is it that we only see investors when MTN and Airtel advertises for shares? We need to see Ugandan investors look out for startups and surprise us with so much money that we actually feel like we are doing less than instead of what is happening. We feel like we are doing so much of what actually our local investors can afford. That is why we don't see money coming up. And then we also are focusing on making knowledge, investor knowledge, very accessible through educating investors on startup opportunities, engaging stakeholders to enhance local capital, and those could be government, could be private sector, could be also academia or institutions of learning. And we are going to see many of those. We are going to be partnering with a lot of those which we are going to actually enter into MOUs during the launch next month. Share insights and best practices from industry experts, just like Ashraf today did. No one could have done a better job than he did, actually. So you can understand what startup funding vehicles is up to from that angle. We have achieved quite a number of things so far, and not all of them are listed here. We have research training activity that we did in collaboration with the Uganda National Council for Science and Technology, which is an institution that authorizes nationwide research. We have participated in other key programs, nation programs. We have supported initiatives that are related to funding, fundraising, and these are some of the pictures that demonstrate the work we have been doing in the last 6 months. So startup funding vehicles is not very old, and that is an opportunity for all of us to join. It just started around July or August last year. What next? We are looking at Uganda's funding landscape, a study. We want to do a nationwide study. We are developing investor networks. We would want to also establish a startup investment support center. So if you want to make an investment, you know where to go. And that is what exactly Flat6 Labs was mentioning, that it acts on behalf of corporate venture capitalists. They are more like consultants. So this could also be a desk for individual investors as well. The diverse funding mechanisms, we know there are very many types of mechanisms for funding, and would want to explore and expedite all these for anyone who is interested in investment. And of course, strategic collaborations with anyone who gives us leverage. Proactive action, you can always turn up for this investor knowledge learning series, where also we are going to be giving certifications so that at the end of the day, this knowledge becomes very easy to extend to other people. If we had 100 people with investor fundamentals knowledge, it means that each of them can influence 10 investors. And at the end of the day, that is how we build functional investor networks in Uganda. If you want to join startup funding vehicles, as I mentioned on the call, we have members, founding members, and it would be an opportunity for you to get first-hand information, understand the strategy, understand where we are going. If you are interested in opportunities that are coming up, we have exposure programs coming up where we will be visiting the African ecosystems. We have trainings for those ones who are, who want to become really investors, and all this is going to be evidenced during the launch. So I all invite you to keep your eyes open for the launch come the National Science Week. Of course, we keep hosting some of these engagements. If you want to become a member, it is easy. You just need to pick up a tier, and these tiers are not, you're not here investing, you are just contributing to become a member so that SFV is able to continue managing the expenses. Say, for example, a platinum or a gold or any other package, you are able to literally get benefits, but at the same time have certain responsibilities. For example, under platinum, you contribute to strategy of startup funding vehicles. We want to see a Uganda where we see like 10 investor networks, and we know that all these have been fueled by startup funding vehicles in the next 2 years. Wouldn't you be happy to be part of that story? Literally, that is what we are talking about. And of course, if you want to review a pipeline of startups, maybe you're an investor, you also have money that you want to deploy. Maybe you're a startup and you want to access investors in our network that over time we are going to be getting. You want to access maybe programs for capacity building at a discounted cost. This is why you need to be and to join startup funding vehicles. And if you are a partner, if you're looking to partner with startup funding vehicles, of course, we are looking for strategic partners, and we have partner packages as well. So you are very, very free to come back to this link, bit.ly/funding vehicles, and then you can submit your expression of interest in a form, and an SFV associate will be happy to reach out to you and discuss further details. Yeah, so ladies and gentlemen, I want to thank you once again for taking the time and for being consistent on listening to me and participating in today's webinar. The next webinar is going to happen next week, and most likely we are going to be talking about investment vehicles in Uganda, especially looking at things like unit trusts, things like initial IPO offerings by Uganda Securities Exchange, but we shall be reaching out to you on your emails. Make sure that you drag the email of startup funding vehicles to your primary category so that you do not miss any update that we shall be sharing. Other than that, I want to thank you once again and wish you a blessed evening and weekend ahead. Thank you for taking the time, and we meet next time, same day, same time on Friday. Over.
Good weekend too,
You
and
have
thank you
not
very much.
addressed the question for Paul in the chats.
Okay, someone has a question. Sorry, I did not see. Is this money for membership or per year or one-off? Roy, do you want to take on the question quickly?
So thank you very much, Kenneth. To address your question, Paul, the money is it's a one-time payment. If at all you want to be a platinum, a gold member, it is a one-time payment. Yeah. Then there is a question from Justus. I think that is for you, Kenneth.
What is it saying again? Shall we be able to pitch to you at the launch? We are ready to hit the road running. Yeah, thank you very much, Paul. I think I would be happy to maybe connect you to the organizers of the National Science Week, because they are going to fly in investors from outside, and SFV definitely will have interested or a few investors also join the sessions. So I, particularly for startup funding vehicles, we haven't yet started the curation of startups and maybe creating platforms where they can pitch. This will only be and exclusively be launching startup funding vehicles, congratulating people who have been a part of the sessions. We shall be signing MOUs with reputable institutions which are beyond even Uganda. And we are very dedicated to make sure that in the next 1 to 2 years, we have at least maybe 5 investor networks that have developed. This could be angel networks that can start syndicating. Syndicating literally means that you combine as a team and invest in a single startup, or many other startup. If you have 100 millions or 10 millions, you can choose to say, I want to invest only 1 million, but you invest it in different companies in the same maybe syndicated group. So maybe if you're 10, each of you could say, we are investing 10 million in one startup. Each of us will contribute 1 million. Another startup, 1 million, 1 million. So you are literally deploying 10 millions, and you are 10 people, that is 100 million deployed in different startups. And at the end of the day, I can assure you what comes out of that is phenomenal and can lead to a change of conversation on how influential that kind of approach can be to startups or vulnerable startups that for the most part we have in Uganda. Otherwise, we are happy to take on further conversations at a private level. You can reach out to us. You can reach out to us. Is the subscription plan SFV? It's a one-time payment. Roy mentioned. Maybe you had actually gone out. Yeah, but feel free to, Roy, if you want to share the link, feel free to join or respond to the link where we will get your information, and then the what? I was just sending you the link. The the SFV associate will reach out to you with details, and then you can have enough time to ask all the questions one-on-one. And of course, selecting which package fits you best, that is also something you can't decide from here. Yeah, other than that, thank you very much. I hope that the next session we shall all be able to invite our 1 or 2 other friends who would be very, very keenly interested in this conversation, because if we do not empower our ecosystem, we are going to keep lagging behind in or on the continent. We need to lead the continent, at least when it comes to issues of investment. I wish you the best of the day. We have gone post time for some good minutes. These sessions are supposed to be stopping at exactly 7:30, 1 hour and a half. But I thank you for your patience and hope to catch up next week. Thank you and good night.
Good night, team. Thank you.